Hello, everybody, and welcome back to another exciting episode of the Breaking Bitcoin Market Update. Today is January 28th, 2022, foul year of our Lord. Hopefully, everybody watching the show today is doing absolutely fantastic wherever you happen to be tuning in from and wherever you happen to be in this fine world today and wherever you're watching us, whether it's on the YouTube, whether it's on the Twitch, whether it's on the D Live. My name is Justin Wise. I'm the lead analyst and senior mentor at Kraken Cryptocurrency, bringing you guys today's show. This is the #1 YouTube channel for objective analysis and learning how to trade the cryptocurrency market. So without further ado, we've got a lot to talk about today. We are moving into the weekend. Generally, over the weekends, we see the same pattern over and over in cryptocurrency. We usually get lower time frame positive price action. All right. So Saturday, through Friday evening into Saturday, we tend to get markup in the markets. And then from Saturday evening into Sunday, the markets tend to correct back down to the level. So the weekends tend to be a wash. There is volatile price action. But in general, the weekends tend to end up closing and opening with traditional CME market exchanges. So the BTC perpetual forward contract on the CME exchange tends to open up right where it closes the previous week. So with that being said, we're going to look at where we are trending. Hello, Rode microphone. We're going to look at where we're trending in the market right now, what the overall direction is. We're going to look at the weekly chart, give us an idea of what we're looking at, what our analysts are looking at. And we're just kind of going to go over the same analysis that we covered a few days ago, looking at where Bitcoin is, where we are at in the market cycle, whether we're in a bear market or not, we're not, and what we can kind of expect moving into the next few weeks and months for our long-term positions. And then, of course, we'll also dive into the charts and see if we can find any actionable trades. And then we'll take your chart requests and handle any kind of news and updates if you guys are interested in that. So strap yourselves in for that. It's going to be like that. All right. The first thing we're going to look at as normal is we're going to zoom to the weekly chart on Bitcoin, which has been very telling. And so just to repeat what I had mentioned the previous week, and I'm going to continue utilizing this as a baseline of analysis, is just what we've seen historically from Bitcoin's price in market cycles as we reach peaks and as we start to establish new lows and new support. All right. So what I mean by that is that if back in 2013, when we peaked at around $1,000, if you had told the market that we were going to establish a new low that was higher than the previous market cycle high, it would have been inconceivable. All right. But we did. We established a new high around the $230 mark. If you would have then told the market when the market peaked in 2017 that we were going to establish a higher low that was higher significantly than our previous market cycle high, they would have said inconceivable. But we did. We peaked at $3,500, almost 3 times the previous market cycle high. Now, we have now peaked at around $60,000 to $65,000, depending on what exchange you want to look at. And it is my argument that we are going to establish a a low in this market cycle that is higher than our previous market cycle high, which would be $20,000. All right. Now, because of the slowdown, for those of you who don't know this, it is projected that Bitcoin's price appreciation and market cycles will taper down as we move into the future, because the logarithmic growth, the explosive growth of Bitcoin, is going to require more units of energy, in this case, financial capital, to make those same percentage points gains as there are more market participants and liquidity in the market, i.e., the more that Bitcoin's price moves up over time, the harder it becomes per percentage point to move even higher. All right. Now, that's not to say that Bitcoin is by no means done in its growth or that there's no opportunity left in it. It remains the best appreciating asset and investment vehicle of the previous 10 years. It has outperformed literally everything over that same time span. So Bitcoin still has a ton of growth left to give, a ton of gains left to give. And for those of you who can identify these opportunities and just be involved in the market, this will be very helpful for you as you kind of look to lock in profits and look for what decisions to make. Okay, so previous market cycle high of $20,000, and it is my estimation that we are going to find support if price continues to trend lower, around the $25,000 range. This is based on the fact that historically, since 2015, and honestly, even prior to that, we didn't really just have the 200 weeks. We didn't have the 200 weekly moving average at that point in time. However, we bottomed there. We just didn't really know it. All right. But since 2015, Bitcoin has historically bottomed around the vicinity of the 200 weekly moving average. We can see it here in 2015 on the chart. We can see it again in 2019 as we descended through the 2018 bear market. Again, when we reached the peak in the summer of 2019, and then ended up finding support in Q1 of 2020. And here we find ourselves after making a new market cycle high. Looking at where price is likely to bottom out, I think that number is going to be around $25,000. All right. Now, as we can see, we do in 2019, we do trade below the 200 weekly moving average for quite a while. It was about 3 or 4 months there. And we do wick below it here in March of 2020. So by no means is $25,000 the bottom price. When we get to these key levels, it's always going to depend on actual market participants. How many individuals actually hit the red market sell button, how many limit orders are stacked around the books, how much liquidity is available, and there are other psychological and fundamental factors that can affect those things. However, it does not decry and it does not take away from the key importance of that level. I don't really care what anybody has to say. Key levels are key levels in Bitcoin's price action. You have quants, analysts, traders, investors, all of these individuals can look at these patterns and repeat these patterns moving forward. There is a reason that price does these things at these levels, right? It's not just because these elements exist on a chart. It's not just because that number is 25,000. It's not just because there's a yellow line on the chart that price has bottomed around before. This is a very complicated and intrinsic aspect of global financial markets where the decision-making processes of millions of people, billions of dollars, is encapsulated and shown on the charts. People can say whatever they like, but at the end of the day, the charts show you what has happened, right? The charts show you what has happened, and it is the only price point, it's the only sort of predictive analysis that we can find to attempt to figure out what price is likely to do in the future. All right. So incorporating even simple technical analysis into your buying and selling decisions, into your investment decisions, can, if executed properly, greatly improve your performance. Inconceivable. Thank you, Kavano Trades. I appreciate that, my friend. All right. Now, we also pointed out previously kind of Bitcoin's cycle behavior as we correct from new all-time highs. All right. And one of the most identifiable patterns that I've been able to determine is that after Bitcoin reaches a market high, we will come down to consolidate. We will correct down to the 50 to 55 period weekly moving average. We will then bounce. We will then, excuse me. So that's the 100. So let's just move that line right over here. So we correct down to the 55 to 50 weekly moving average. We bounce. We correct down to the 100 weekly moving average. We bounce, and then finally we end up correcting down to the 200 weekly moving average where we bottom. All right, and we've seen that same behavior play out right now in Bitcoin. So when we hit the first new all-time high at 60,000, we corrected down to the 55 period weekly moving average and the 50% kind of COVID panic sell-off that we experienced in summer of last year. We then rallied again to actually, for the first time, make a new all-time high. However, what followed next was exactly what we've seen in Bitcoin's history before. We corrected down, we wicked off the 55 this time, but we were ultimately heading to the 100 weekly moving average, which is where we are now at. All right. I am expecting that Bitcoin will now bounce to find resistance around $43,000 to $47,000 before ultimately correcting down to the $25,000 mark. Now, this is about a 50-50. It is possible that Bitcoin does continue to trend downwards. However, that is less likely than the more significant bounce at this level based on what Bitcoin has done historically. So how can you take advantage of this? All right. So for the more passive investor, an individual could allocate a certain percentage, let's say 20 to 50% of their funds, just depending on your risk tolerance, into cryptocurrency at this point in time, whether that be Bitcoin, whether that be other altcoins. Remember that if Bitcoin appreciates, other altcoins will appreciate as well. Now, to determine whether or not it's more valuable to hold on to Bitcoin, which I think in this case it is, when we're playing when we're playing against the trend here, because the trend is to the downside, and when we're trying to take trades to the upside against that, when we're counter trend trading, you essentially generally want to be in something that's the most stable, that's the most liquid. That's going to be Bitcoin. So altcoins, while they can deliver outsized profits in periods and outperform Bitcoin, I think more than likely the safer bet is to utilize Bitcoin or Ethereum as your main vehicles for this reversal trade if you're going to be taking this. Look to take profits around $43,000 to $47,000, and then again look to stablecoin back up. Or you can also stay in stablecoins and simply take this trade on the USDT markets and then move back into your stablecoin heavy position around that area, unless we get some more significant trending signals at that point in time. And then once we reach the $25,000 area, you can either begin dollar cost averaging at that level, or it's totally fine to be dollar cost averaging now. Bitcoin is already down 50% from its highs, and so beginning to dollar cost average now is an extremely it has been historically a very good strategy. Dollar cost averaging when there is blood in the streets. It's fine to dollar cost average even from here to the upside to the $43,000, $47,000. Just understand that you're likely going to be holding on to that position for a more significant correction, another 50% correction where you can dollar cost average more. However, as history has shown, those who are patient and spend their time and wait, those who are patient and let the market come to them and allow the market to appreciate through another cycle, those individuals are rewarded. All right. So if you're having difficulty timing the markets, just simply dollar cost average into your positions. And right now is a fantastic time to begin doing that in Bitcoin, regardless of where the price goes over the next 6 to 9 months. Okay, that's the weekly outlook. So where are we on the daily? We can go to the daily to get a more. The daily is the time frame that I primarily trade. The daily allows you, trading on the daily time frame is just magical. It allows you to actually have a life. It allows you to not spend your entire day in front of the charts, and it allows you to manage your positions with ease because again, you are only looking at the charts once, maybe twice a day, as opposed to trading the 4-hour or God forbid the 5 minutes, the hourly chart, which I do on occasion because I am good at it. And sometimes you need to pay the bills. But we can look at the daily to determine when is a good potential entry for these types of trades. We want to see bullish momentum. We want to see positive price appreciation, and we want to enter into the strength of an uptrend so that we can get in when there's less chance of price reversing on us and have an opportunity to ride this trend as fully as it can. And I would say a movement from $36,000 where we're currently at to $47,000 is certainly a great trend to capture. That's going to be a 20 to 28% profit depending on where you end up taking profits on this position. All right, so to utilize this, we're going to be using a pathways to profit methodology style of trading, which is an indicator-based style of trading that I teach on our website and in our Discord. So for this, we're going to be utilizing a baseline to determine whether price is bullish or bearish and in what direction we should be trading. So as of Friday, as of today, we do not have the positive price action that we need for this to be considered a daily bullish trend. We're not there yet. We're actually in what is considered a no trade zone following a successful bottom feeder trade, which is a separate algorithm that we run. All right, so we're going to run through the indicators one by one here, and then we'll go down to the lower time frames as well. So we are using a 26-period Donchian as a baseline here. If price is above the 26-period Donchian, we are looking to go long. If price is below it, we are looking to go short. We are utilizing one of our proprietary indicators here, Parallax, which is a algorithm utilizing the relative strength index and the commodity channel index to determine the divergence between these two and identify overall what direction is the trend moving in, where are we at in the trend cycle, and are we in an overextended area of the market, i.e. overbought or oversold. So as we can see here, Parallax is red, meaning we are in a bearish trend still on the daily time frame. We can see multiple occasions where Parallax has gone into the oversold territory down here below the negative $200 mark. It happened here, and we did get a nice bounce up to the 26-period Donchian, which does act as overhead resistance when price is below it. And we can see it again here. Price went oversold on this large movement to the downside. We have now recovered from the oversold territory and are creeping up toward that zero line, which if we cross would put us into a bullish trend state. We're not there yet. We did again bounce off of that oversold signal, again up to that overhead resistance of the 26-period Donchian, and therefore and we can see price has not yet put in the bullish price momentum that we need to have price be in a bullish trend and for us to be looking to go long at this point in time. Whoops, sorry, that was a little too much. Didn't want to delete the indicator, just the circle. All right, time transformation is going to be another momentum indicator that we're going to use to confirm the movements of Parallax. This is another proprietary indicator based on the Fisher transform that we provide to all of our members. We can see here, similar to Parallax, we did get oversold signals and buy signals. Time transformation does provide reversal buy signals. So we can see that these last two reversal buy signals were profitable. There was a good price movement there. And even here on this candle, there was good price movement up to that 26 period Donchian baseline, which is a good take profit target, utilizing the zone around that as a take profit zone. Okay, we have not yet crossed the zero line, so time transformation is not bullish as of yet. So we're not actually, again, similar to Parallax, we're just not quite there yet. We're on the wrong side of the baseline. We're on the wrong side of the Donchian. We are below the zero line on Parallax. And we are below the zero line on time transformation, but we're starting to get there. All right. Again, as I said last week, I think by mid next week, we're likely going to be pushing up and breaking up and looking into getting into that bullish trade. As I said on Wednesday, the overall price action that I was expecting. So it's Friday, Thursday, this is Wednesday, and this is before this big wick to the upside when we recorded the live stream. I was expecting a movement up to the 26 period Donchian, a move back down, and a higher low to be established, in which case preemptive traders could enter into the long trade on that higher low, or they could wait following that higher low for price to then move up, cross across the Donchian, get all the bullish indicators firing, and then take the trade at that point in time. All right. The other thing that's significant here is volume. So this indicator averages Bitcoin. This indicator not averages, but this indicator aggregates all the Bitcoin trading volume across all the exchanges. So we can get a real good picture of what the Bitcoin markets are actually doing volume-wise. Volume analysis is very important to determine if there's actually fuel to the fire, right? We can see all the lines and charts we want, and our momentum indicators can oscillate as much as they want. But if there's not volume, if there's not open interest, then price is not going to move. And we need volume and open interest for price to move. And we can see here that the market bottomed pretty much relatively on high volume, which is what we love to see. We often see volume. So volume comes into the markets in significant amounts at bottoms, at tops, and at the initiations of trends. Okay. So we can see here that the market closes down very sharply over 2 days here. And we have huge spikes in volume and selling pressure. This is good to see. This is letting us know that a lot of individuals are selling at these levels. A lot of individuals are panic selling. And likely the majority of people who want to sell have already sold because of all the volume that came in. So all the sellers have really already sold. All right, this is what this analysis would be telling us. And if all the sellers have sold, then there's really only one way price can go, and that's up. All right. Similar, so we can see big volume come in up here at the peaks of markets. And when everybody who wants to buy has already bought, there's really only one way for price to go, and that's down, unfortunately, because all the buyers have now been exhausted, and you need buyers for price to move up. That's the only way that markets move up, is if there is a greater fool than you who will buy it at a higher price. Essentially, this is the greater fool theory of markets. Okay. And so the most significant thing here, the thing that I really like to see here is this big volume come in on these two down candles, the market not move significantly lower. And then here on this Darth Maul candle, really this doji candle, we get this big spike in volume too. Okay, so big spike in volume. This, the way that I interpret this is that most sellers sold here. And we do have long positions that establish themselves here. And man, these whales are nasty because they wicked everybody out of their stop losses, accumulated, and now we're kind of fueled and geared to go to the upside. I would like to see that higher low. I'd like to see that come down to around here and then price push up and push us into a nice bullish trend. It is time, guys. It is time. Okay. All right. The last thing I will point out here is just the bottom feeder signal. The bottom feeder algorithm is another indicator that we utilize to determine market bottoms. But it is specifically designed to just catch profitable trades. It's not an investment tool, and it's not a huge macro bottom tool. It's just designed to get into trades when the market is very overextended and just nibble positions off of the bottom, right? That's why we call it the bottom feeder. The bottom feeder did have a successful trade, so it called for an entry on this candle and on this candle, averaging your entry here. And then we took profit on this up candle. It's automatic. The take profit target was already generated. All we had to do was wait for the limit order to get filled, which it did, and we made money. All right, so daily is not quite there yet. The weekly chart is telling us that we are going to be moving up. The daily chart is showing us signs that that is going to be happening soon, but the price action is just not there yet. The market is not yet moving favorably, and the conditions are not yet there, I think, for the optimum entry. Now, for those of you who want to be preemptor traders, you can enter now into your long positions. You begin dollar cost averaging or averaging into your long positions in these areas of the market. Just until we have full bullish confirmation, you need to make sure you're using stop losses. You need to make sure that you don't revenge trade should this analysis prove incorrect or should the market move down. The market is inherently random and anything can happen. Okay, we will go to the lower time frames. We'll go to the 3-hour time frame now to determine what one of our most popular automated strategies, the Super Duper DEMA strategy, is doing right now in the market. So the Super Duper DEMA strategy is coming off a fantastic sell signal that we generated right here, catching this trend all the way to the downside. And we have not yet generated a buy signal yet on the 3-hour time frame, which is the primary time frame that the Super Duper DEMA strategy runs on for Bitcoin, Ethereum, and most of our altcoins. However, we do have it running on the 45-minute time frame for other assets as well. So we're just going to go through. There we go. We're going to go through here and see how we're doing on Ethereum. Okay. Interestingly enough, so the 3-hour, the Ethereum system here is coming off a very successful short signal as well. Now, we didn't get a long signal here, which is good because price essentially just whipsawed. And we are in a short position now. Okay. Now, I am not sure whether this is going to win or not. The way that we have this set up is utilizing a 3% take profit. So from the entry here, we see price has moved against us quite a bit. So we do need price to hit about 22.71 for that trade to be effective, at least for the first take profit to execute. And this, what the algorithm here is doing is a little contrary to my analysis and what I would expect from Bitcoin. However, that's the reason it's an algorithm. It just runs nonstop, and it is very, very profitable. So the meso timeframes, and this is fine, right? We can have bearish price action. As I said, I'm expecting a correction here, for price to move down and establish that higher low. We can have that inside an area where it makes more sense long term to be building up long positions. So it just depends on how you want to trade, how frequently you want to trade, and just really what your risk tolerance is. Okay. Now, let's go down even further to the 5-minute time frame and get very active here with the VWAP double bounce strategy. All right, so the VWAP double bounce strategy, I'm going to be releasing this soon. This is our day trading algorithm, and I've just had a lot of fun using this and trading this personally in my own free time. It's really good. It utilizes the VWAP, the trading session indicator, and it also uses the QQE mod along with bullish and bearish divergence. Now, I've made some changes to this. So this strategy is known on the internet. I made some modifications to it, and I've got some new rules for trading it. So over the next few weeks, I'm likely going to be releasing this to all of our premium members as a value add indicator that they can utilize in our premium indicator suite. And I'll also be releasing the tutorial video on my opinion on how to best utilize this for your personal trading. Of course, I'm going to love all the comments on the video because I love when you guys come up with unique and cool and interesting ways to utilize these indicators in ways that I didn't anticipate or ways that I didn't program them to do. So really looking forward to hearing what you guys have to say on these topics. So, okay. VWAP double bounce strategy. What have we seen today for Bitcoin? So if we zoom out here, we can see that overall, Bitcoin really isn't doing much. We're still locked in this range. Okay, so we can see this decline coming in off the 20th of January. And even with these big spikes to the downside, we can see that overall, Bitcoin is trending up, but we're right back in kind of that value area. Okay, we can see that we haven't broken down between these new levels that we've established, but overall, we're really in this kind of big, broad range of accumulation and distribution that's happening right now. And I would argue that on the Wyckofian scale, it's accumulation, not distribution. But this is important to note. So let's bring up one indicator that I think will help. And that's going to be session volume. Let this load. Okay. So one rule in kind of day trading is that price likes, one rule that I like to follow anyways, is that price likes to return to points of control. Like price likes to retest very critical key areas that we've established on previous days. So as we can see here, we do have an untested point of control up at 37,842. I think it's likely that we're going to be tagging that over the weekend, maybe even today, if we can get a sufficient rally moving into the afternoon here. But that is an untested point of control, and we can see here that price does like to retest those levels. So yesterday we established a point of control at 36,106, and what did price do intraday? It moved down to that price level to test liquidity at that area before bouncing back up, where we're currently trading underneath today's point of control. This would typically be bullish. So in general, I would look to be a buyer as far as day trading goes here. Let's see here. We are coming off, and this is pretty cool. We are coming off 3 successive buy signals. So essentially this algorithm had you averaging into a long position over these 3 candles right here, and then taking profits on these red diamonds. We don't have any full, and right here, this is actually the full entry right here for the double VWAP bounce strategy on this candle right here. Let's actually switch to Heikin-Ashi so this looks a little bit better. Yeah, on this candle right here, this is when it wanted you to go in, and then we have our 2 exit candles right up here. And we are now getting a little bit more bullish divergence, so we're starting to get those buy signals one more time. I've seen that when price is correcting down from highs, we typically get 2 to 3 of these buy signals, so this is going to be an averaging strategy, and this is opposed to the original way that I had proposed this strategy. But I just realized that with Bitcoin, waiting for that like full signal and then setting your stop loss at the most recent low, we just got stopped out almost all the time. However, price inevitably, not inevitably, but almost always moved in our favor if we were just patient and used a wider stop. So this is gonna, and this is good. This requires individuals to use smaller position sizes, to not kind of do the 5x all in, all leveraged kind of big YOLO trades that a lot of lower time frame strategies kind of incentivize you to do, not directly, but indirectly. Just because of their very nature, because it's a small price movement, so you need a large position. And if sometimes you can get very confident in these, in trading this noise on lower time frames. But divergence is extremely important. It shows you that market momentum is shifting. It shows you that the movements to the downside are weakening. And understanding where price is in its range and where price is in relationship to the VWAP and the point of control is very helpful. So I would be looking to be a buyer as price descends down here, and I would ultimately be looking for a price target of yesterday's 2 days ago, point of control around 37,842. I would probably be a little conservative and shoot for about 37,609. That way we can actually hit our profit targets and not get front run. All right. Okay, that's pretty much all I really have for today's analysis. So I'm going to go to the chat, and actually we're going to go over here and stay in the VWAP double bounce because it's just a little bit more exciting to watch intraday. So I'm going to go up here, and we are going to go through the chat. So shout outs to Sweet Canary and Cavano Trades, RL, Xavier, B-Flow, Don Candon, Bob the Builder, Gravy Grits and Green. We've got Mr. Ether, Alex81SG. We've got Jordan Stotts, Anyword. Okay, good to see you guys. Hopefully you guys are doing good today. Okay, so let's see. We've got a few questions in here on Biden's cryptocurrency executive order. Now, I am going to take some time over the weekend to review this, and I will have a video coming out on this next week. So right now, I really don't have any firm opinions. I don't want to talk off the cuff about something that I haven't taken the time to fully research. Bob the Builder loves catching these shows live. I love you catching these shows live, my friend. Okay, so here's what we're going to do. I did pull up an article on the... And let's see here. And here's the original article on Barron's. So, oh, you know what? Actually, I do want to view that up here because I have the, there we go. In this browser, I can look at whatever I want. I don't have it on this browser. All right, so don't sign in to continue reading anything. All you guys got to do is download the plugin and you can skip past all that Wall Street Journal stuff. Let me get this the same. There we go. That's about right. And we'll switch this over. There we go. Okay, so this was reported on by Barron's yesterday. The Biden administration is preparing to release an executive action that will task federal agencies with regulating digital assets such as Bitcoin and other cryptocurrencies as a matter of national security. A person familiar with the White House plan tells Barron's. So this is going to come in the next few weeks, would task parts of the government with analyzing digital assets and assembling a regulatory framework that covers cryptos, stablecoins, and NFTs. This is designed to look holistically at digital assets and develop a set of policies to give coherency to what the government is trying to do in this space. Blah, blah, blah. Blah, blah, blah. All right, I didn't see anything major there. Let's go back to the... On Thursday, a report by Decrypt suggested that a sophisticated plan is being pursued that would hand stablecoins to big banks, shunning Tether while embracing regulator-friendly issuers such as Circle and Paxos. The article suggests that Treasury Secretary Janet Yellen and Senator Elizabeth Warren, both vocal critics of cryptocurrencies, have been spearheading these efforts. Okay, so all that. Let's talk about reality. Well, I just like when I say be a buyer of Bitcoin, like intraday, and then price, spikes 0.5% in 5 minutes. Calm down, guys. Don't bet the bank. Anyways, okay, so let's talk about those, a couple things there real quick. Okay, so let's talk about that. All right, so the reality is that, and that article pointed it out, cryptocurrencies don't solely exist in the United States. The United States has seen an influx of cryptocurrency mining, and an influx of cryptocurrency. What's the word I'm looking for here? Not marketers. Help me out here. Not regulators. Lobbyists. All right. We've seen an influx in cryptocurrency lobbying. There is a lot of money that is lobbying into the governments right now around the world. And this is why we've seen more favorable reviews. Now, the big key issues so let's be real about something here. I kind of wanted to talk about something that somebody had brought up yesterday. which is, so I'm going to open up Discord, and I am going to basically just rehash a question that Alex had asked in the Discord yesterday. So Alex's question yesterday in the Discord is, he asked that, I'll just read it. Hopefully this is okay, Alex. He asked, I have a fundamental question that the major argument for Bitcoin's price going up over time is its limited supply. However, since the main use case of Bitcoin is store of value, the benefits of holding Bitcoin can be reaped by holding any derivative of Bitcoin. Hence, I don't need to hold the actual Bitcoin, and since I don't, the limited supply is irrelevant because by creating derivatives of Bitcoin, they basically make Bitcoin unlimited. Am I missing the point, or does it make sense? And then he asked for my take on this. So I made two arguments here. The first argument is the essential greater fool's narrative of how markets move up. All right. There's a really good video on YouTube right now called Line Goes Up, The Problem with NFTs. I think you guys should go check that out. In the documentary, the creator does take a pretty negative stance on Bitcoin and crypto assets and NFTs in general. But, you know, hey, everybody's entitled to their opinion. It's good to not just immerse yourself in the echo chamber, right? Like so much of what I consume on a daily basis just takes for granted that Bitcoin's not going anywhere. It's interesting to hear takes on the outside. But essentially his argument, and one of the major negative arguments against Bitcoin, is that it came out of the gate as a speculative financial vehicle, like from square one. And instead, far from being the tool that would remove the corruption that the banking industry had laid waste to us through the 2007-2008 financial crisis, it became the new vehicle for them to continue their scam. All right. The argument here is that the only reason that Bitcoin's price has gone up is the greater fool's narrative, right? Individuals, speculators buy Bitcoin with the intention to sell it later. And the only way they can sell it later at a higher price is because some greater fool down the road is willing to buy it at an even higher price. And that greater fool is only purchasing Bitcoin because he believes that there's an even greater fool farther down the road that will buy it at an even higher price, and so on ad infinitum. But unfortunately, as we all know, that these cycles cannot last forever. And eventually price comes tumbling down, where the market cycle repeats itself again. This is smart money, institutional money, and this is where we see them step in. This is why we see these big volume spikes when the market's at lows, right? We shouldn't be mad at institutional money. We should just learn how they operate so that we can navigate these markets a lot better, okay? So in that light, right, why hold Bitcoin? You could tether all of your BTC, lock in the dollar value of your cryptocurrency, and simply go long on the USDT perpetual contracts, and you get the same financial benefit of holding Bitcoin. You get the same price appreciation. You get the money. Without actually having to hold Bitcoin. All right. Now, the contrary argument to this, my argument to this, is the real sound money argument. This is the argument that if you hold a derivative of Bitcoin, you're no longer holding Bitcoin, right? If you hold Bitcoin in cold storage, nobody can take it from you, right? Obviously, there's just things that can happen because of the reality that we live on Earth and we're human beings. We have bodies that are fragile and squishy, and so the $5 wrench attack is real. For those of you guys who don't know, one of the early arguments against, like, well, why are we doing all this digital security? Why all this cold storage? You could have $1 billion, and your private keys written down on a piece of paper, that are securely stored in 20 million places. But if somebody just hits you over the head a few times, the $5 wrench, they're going to make you capitulate and give them your private keys. Okay. So derivatives in cryptocurrency, like for example, holding Tether. Tether is issued on the Omni layer protocol of Bitcoin. So it's issued on the Bitcoin blockchain, but like a very small percentage of Tether is actually flowing over the Omni layer protocol. The majority of Tether exists in ERC20 and TRX20 right now. So, or TRC20, I think it's TRC20 is the token standard that they call it over there on Tron, which is just an Ethereum clone. But the majority of Tether exists on the ERC20 channel. The philosophical argument for holding real Bitcoin as opposed to derivatives of Bitcoin is the fact that if you don't hold Bitcoin, it's not your keys, it's not your coins, right? If you hold Tether, Tether has the ability to freeze their blockchain, roll it back anytime they want, freeze just your specific amount of Tether, Circle and Paxos have the same ability. If you're holding USDC and you are deemed to be, let's say, a suspicious actor by Circle, who does collude and works with regulators, which is not a bad thing. We should understand that this is going to happen. They can freeze your funds, all right? They can freeze your funds. They can burn your funds. They have centralized administrative control over the blockchain. Whereas in Bitcoin, it is a distributed, decentralized system. All right, there's the chance of a rollback in Bitcoin is extremely low. All right, just the power processing levels we've reached and the competitiveness of mining, it's inconceivable. All right. So the argument essentially here is yes, not your keys, not your coins. So if you're not holding real Bitcoin, and we start to see, as we always see, so here's the thing. It makes sense to hold derivatives of Bitcoin when we're in a stable environment. However, what have we seen those at the helm of power do time and time again when shit hits the fan, when war spreads out, when famine spreads out, when plague spreads out? We see institutions and we see governments fail tremendously, all right? Because they lose sight of the mandate of servicing the people, of providing for the greater good, and they start to just line their own pockets, and they focus, or whether they just get bad at doing things. It's not always malicious and evil like I'm kind of portraying it to be. Just for whatever reason, we tend to see institutions fail, and we see the greater good suffer. The problem with Bitcoin, the difference with Bitcoin is that since it's not centrally controlled, it's just simply going to perform pursuant to the algorithm, pursuant to the protocol that everybody is running and agreeing and reaching consensus on which to run. So although price can drop, because that is a factor of human psychology and human selling and human decision making, Bitcoin will continue to function as we expect it to, with no overt corruption. All right, we can have minor colluding and all these kind of things, but again, it's become there's such a good economic incentive built into Bitcoin that it makes colluding less profitable. Right, it damages the chain. And it's set up in such a way that it's become so distributed in such a way that even though there is incentive for short-term gain, the financial cost of achieving such a thing at our current scale of decentralization is prohibitive. All right. So it's kind of like, I don't know. You guys get the point there. So let's take that and let's move that into the question of regulating cryptocurrency. All right, so Bitcoin currently is not the most efficient peer-to-peer cash system, all right? So I don't think governments around the world are imminently afraid. Oh, they might be, they should be. But I don't think they're currently imminently afraid of Bitcoin or Ethereum replacing sovereign currencies, right? That is not their current concern. Stable coins, on the other hand, because they're pegged to a stable value, but offer the convenience of cryptocurrency, I think that is more of a threat to them. All right, so it would not surprise me that they do have a plan to essentially move liquidity or move control of the stablecoin to regulate the stablecoin markets and essentially put those under the auspices of major banks or regulate them like major banks would, which is going to require KYC, customer deposit information, all this kind of stuff. That's going to be very inconvenient for cryptocurrency. The interesting thing, though, is that the U.S. government, while it has a lot of clout, it also has to be very cooperative with nations around the world, and some of these nations have very different opinions on cryptocurrency. It's going to be interesting to see where China takes a stance on this. It's going to be interesting to see where the European countries take a stance on this. Because there's lots of different vested interests in the cryptocurrency market space. Now, overall, here's what I think is going to happen. I think that they're going to attempt to regulate stablecoin issuance. It makes sense that Tether would be shunned, and I think that could have a pretty shocking effect on the market. But I think that might be the catalyst to move us down to that $25,000 actually. So Tether has been pointed out for moving the market up by issuing Tether and buying Bitcoin to push the price up and essentially make things all well and good over there on Bitfinex. Losing that catalyst, losing that trigger, losing that liquidity that would make price go up, I think is not necessary anymore. I think that there is enough actual buying power and liquidity in the market that we don't need tether manipulation, even if it is a real thing. And also, this is just a good point to, it's a good play. I'm not sure where to stick this in the argument, but essentially, you know, I've been very negative of tether in the past. And there certainly is, you know, I just don't know if they're going to fail like I thought they would fail 2 years ago. All right. They've become so entrenched in the cryptocurrency community now, and tether works so good. It really does. Like Tether works fluidly, and it's become far more liquid. And it's now the most, it's overtaken Bitcoin as the most popular trading quote currency. But Tether doesn't operate any differently from the way any banks operate. Banks don't have all the cash on deposit at hand at any given moment. They use that money and invest it, right? And from what it seems like, Tether is holding largely commercial paper, which is generally considered one of the safest investments you can make out there. So we'll see. You know, is this, you know, this announcement was made quite a while ago. We knew that the Biden administration was wanting to move towards some regulation of stablecoins, particularly. And so largely, I think that's already being priced in by the market, just as the rate hikes are being priced in by the traditional finance markets. And by the time the regulation actually gets here, it's going to be fine, right? Okay, but when we have some more information, I'll try to put together a more comprehensive video and do a little bit more noodling and thinking on it. All right, with that being said, yeah, I mean, so, you know, what they can do with decentralized exchanges is that they can require, decentralized exchanges aren't hosted on the blockchain for the most part. Like decentralized exchanges are still vulnerable to the same vulnerabilities that any kind of traditional website hosting are now. We could see markets go dark and go to Tor, but God, that would wreck performance so poorly. It would make DEXs probably unusable for the most part. But what they, you know, so the individuals who have the server registered for the DEX, because it's running on a centralized server, like almost all of these decentralized exchanges still rely heavily on AWS and centralized servers. They can do their best to take the website down or require KYC. So for example, like we already see this on like 1inch Exchange. Like if your IP address is the United States, 1inch Exchange won't allow you to utilize their platform. Now they politely say like, hey, you know, change your VPN. It's like they say it in the pop-up, but pressure can of course be applied to these companies. But again, that's not the step that America wants to take, because I think that ultimately that's going to push cryptocurrency innovation out of the United States, and it's going to hurt us over the next 10 to 20 years in this, maybe the next 50 years in this emerging market, because cryptocurrency is not going anywhere. We're going to continue to grow. And now it's just a question of like, who's going to what country is going to encourage our growth the most? That's going to get a lot of the capital. So Kimozabi says here, Biden signing the executive order will signal the bottom. Yeah, China bans were always the low. All right. With that being said, I do see one chart request on here from Xavier asking to look at the Cardano short, which we'll look at here. So we will look at the Cardano short, and then we're going to wrap up Friday, guys. All right, so let's start off by looking at ADA on Coinbase. Okay. All right. So all of the daily charts pretty much looking the same. Cardano, no different. Cardano, big correction here, 70% correction, peak to trough. Good long-term buying area right here. We can see June 20. So we're at support that we established back in this over the summers and lows of 2021. Let's actually look at Cardano on Kraken. There we go. Yeah. So here we are. We are at the kind of the top, the new level of support here on the markets. Now, if the markets do not bounce here, if I'm wrong and Bitcoin doesn't go to $43,000, $47,000 and just inches its way down toward $25,000, then the next logical area that we could see price return to here for Cardano. I like this. You know, we're at the support of the 2018 bull market. That's pretty cool for Cardano. It's going to be down here around 15 cents, 15 to 16 cents, which is a big correction from where we're at right now. Yeah. Yeah. Cardano just spent so much time down here at these lows. Just big darling of the ecosystem. Anyways, I like Cardano where it's at right now. Again, on the weekly chart, I'm going to be bullish on most cryptocurrencies here for a rally to the upside over the next few months. If you want to be conservative, just be patient here. We haven't put in any, so market structure wise, we haven't put in anything that would make me excited. Like I would like to see Cardano move up here and test resistance and then form a higher low, just like I'm watching out on Bitcoin. All of our indicators here are negative. We didn't even really reach oversold here on Parallax. Let's see here. And we did here and had a nice bounce. We did here, just had a little baby bounce. And you do see this divergence here. Got a bunch of buy signals from time transformation all this way down. Finally caught it right here. Here. Now we would have lost on those positions. Good buy signal here. We haven't had that crossover, so we don't yet have a reversal buy signal from time transformation. But essentially, the trade to be making in this area, if you want to be looking at a Cardano, I wouldn't be shorting Cardano here, but I'd be looking to take Cardano up to about, I'd want to undershoot this, so probably like $1.20, $1.23, and then let that higher low, that higher low establish, and then we could look for that breakout trade if price breaks $1.27. As far as the short trade, that would have happened right here. So we did get a short signal on this candle right here. We have price crossing below the baseline. We have everything flipping negative, and we do have a big volume spike as well. And that was going to be a short trade because price moved down about 16%. So there was a 16% profit potential right there. And now price is just consolidating. So I would be now we're overextended on time transformation. So this is not an area I would be entering short on. I would want to see, if you did want to short this, you need to wait for a rally back up here to about $1.20 and then maybe look to take price down. Again, I don't think price is going to move there. I think price is going to stop here and then move up. But if that's your thesis, if you see something that I don't see, just the strategic area to enter into that short is not right now at the lows. Wait for the bounce. Wait for the bounce, my friend. Will DAI be safe? So DAI is based on Ethereum. So as long as the individuals that are, so I mean, theoretically, yes, you know, we've seen Ethereum crash before and DAI do just fine. Individuals, because what happens is people get liquidated to essentially preserve the DAI network. So DAI will be fine. Let's look at Hex. We'll look at Hex USD. All right, so Hex currently trading around 18 cents. Excuse me, guys. I said you're looking for that 7 cents. Yeah, I don't know if that's going to happen. But we would have to have a really big correction. And it looks like Hex is finding some nice support right here. Again, similar. Hex is not in an uptrend right now. On the daily time frame, we remain below the 26 period Donchian. We did get overextended right here, and we can actually see price diverging away, time transformation diverging. Same thing that we're seeing on all these, on essentially everything that I want to see. We have the market moving down, big spike of volume signifying the bottom, and a big spike of red signifying a downtrend. Big spike of red down here signifying the bottom. And what do we have over here? Big spikes of red, most likely signifying the bottom. I just hope PulseX does as well, my friend. That's all I'm looking to do. Okay. All right. One last one here. Dex. Let's go to that Dex screener, my friend. All right. I don't even know what this is. So 58%'s been burned. That's pretty good. So you got one big whale with about 6%. A couple sharks with about 2%. Those are whales, though, in this market. And then you got all the sharks. Okay, so you like to live dangerously, don't you? This looks like a fun chart, man. Actually, these wicks. I mean, this is living dangerously, but it's fun. Okay. So we got, what I do like here is that we do have some nice, you can see there's some nice volume coming in right here. I don't know why I did that. You know, volume's been relatively flat, but we do see some nice buy volume come in over these candles. We're not in an uptrend at all. So this is, I always use the Ichimoku on like, wow, that's not working very well, is it? Wonder why. I really wanted that daily, but it's not going to work. Let's try the 12-hour. There we go. Yeah. Oh, I see why. Yeah. I need to be weird. I just needed to zoom in. Okay. Yeah, so we're not in an uptrend at all. We do see the cloud. We do see the cloud starting to twist up here, which is usually a bullish reversal signal. And again, this volume is not bad. I would like to see price get above the cloud here, 3532 WETH, and yeah, I don't see anything other than that would really want to make me buy this. This thing's been in a downtrend for a long time. It's not an established coin, so I don't believe in, if it's not an established coin, I don't believe in bottoms. I've just seen these things go down and go down and go down and go down and go down. Yeah, if this thing's, there's quite a bit of liquidity, quite a bit of volume. And if we can get this thing back above, if we can get this thing above the cloud, if this thing can move up, basically needs to move up 100%, you know what I mean, and get itself into a bullish trend. Otherwise, this is not really my appetite right here. We can look. So AlphaZero looks like it was launched on Binance Smart Chain. And so we're going to take a look at, looks like it's doing pretty good, man. This thing has pretty much just gone up. We're up over 300% on that AlphaZero. Let's check let's give it a little token sniff. Well, I would be careful, man. Oh, this is the fake one? It's not available on any decks? Oh, okay, I see. Market cap 155 million. Self-reported, fully diluted at 288. Okay, so that's a 2x it can do. So the token's been around for a while. Let's see here. All right, so it's a DAG. It's an Algorand DAG. Enterprise-ready high-performance blockchain with a novel DAG based consensus protocol. So it's Algorand with a DAG. Has not been listed on any major exchanges. This is what I don't. So is this? Oh, this is just one day. Okay, so the price is okay. So it's up 60% since it launched on. Is Mercatox? No, this isn't Mercatox. This is MEXC. I don't even know what this is. Let's go to this is different from CoinGecko. Okay. Two forks, 22 stars, 4 forks. Yeah, this is not a very active GitHub, but they're enterprise, so I'm assuming they're not open source. All right, so I don't have a direct answer for you, man. What I can tell you is this. All right. This thing just launched. It seems to be a relatively like larger project. This isn't like some ERC20 or some like phantom rug pull. All right. So it's not a rug pull. It seems like a pretty big project. Twitter's growing, price is going up. More than likely, if they keep the marketing going, then price is likely going to continue going up, right? 60% really isn't anything in cryptocurrency. We're really looking for those 2,000%, especially if you just got in yesterday. Having said that, right? Don't take my word for it. I'm just a guy on the internet who's pretty good at trading. But typically when I enter into projects and I try to get in on the ground floor of things, I don't really waste my time or my money anymore on things that I think are just going to pop real quick and then get out of. I don't really have time or patience for that. A lack of patience. But when I find a project that I think is pretty good and it's growing real good, I mean, you tend to want to hold on to that for a while, right? Especially if you're pulling in some alpha over the markets, which are tending to bleed out right now. So we have something that's moving contrarily to Bitcoin. This is moving up. It's a new project. Again, I'm not telling you what to do. I'm just saying if you see all the growth metrics on this continuing to go up, then likely price is going to continue to increase. But take profits on the way up and don't become a bag holder on this project, because I've never heard of it. And I wonder if they're, I do want to see this. Hold on. It's their website. Website. Yeah. Okay. Yeah. So they that is kind of funny. It is a WordPress website. Like that's not bad. Like our website is a WordPress website. It's just it's just not very typical. It's really easy to spin up a WordPress website. Anywho's, okay, guys, sorry. I've gone a little bit longer than I expected here. So rewind the show if you want to view the analysis. Huge shout out to all the premium members, of course, without whom this wouldn't be possible. So thank you guys very much. Thank you to all the channel subscribers. Thank you to all the followers on Twitch. Thank you to all the followers on DLive. We really appreciate your support as we continue to grow. If you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, please leave them in the comments section down below, and I will do my best to get to them as soon as possible. If you guys would like to join our community and trade along with our premium indicator suite, our live buy and sell signals, as well as our online educational content, including all the other extra stuff you get as a premium member, make sure to join us at premium.krakencryptocurrency.com to get access to all those tools and also all of our just everything. It's all there. So other than that, guys, I will be back on Monday, 12 p.m. Central Standard Time, 11 a.m. Mountain Standard Time, and that's going to be 1 p.m. on the Eastern Seaboard, guys. Stay tuned. Hit me up on Twitter over the weekend at cracking_crypto, and trade safely, guys. Thanks for all the time.